Hello, and welcome to our workshop created for anyone who's thinking about buying a home. My name is Rhonda Porter. I'm a licensed loan officer in Washington State. I've been helping people with their mortgage needs for over 25 years. So I'm very happy to be here with you today. We're going to keep this workshop at about an hour or less, and it will be recorded so you can watch it later. And we're going to cover in this workshop the steps it takes to get from going from pre-qualified up to submitting an offer. And so at the end of this workshop, you should have a good idea of what to expect during the pre-approval process. So my goal with this workshop is to keep it to 1 hour. And again, we might wrap up a little sooner. We'll have questions and answers at the end, so please leave them in chat, and I'll possibly get to you even after the class if needed. And after the workshop, you're going to receive an online dashboard, and that is yours to keep. It'll be updated with other classes as we progress, and you'll also have the previous classes that we've done for this workshop series. And I'll also include any assignments or supporting documents that I think that you may find useful. And last but not least, please be sure to RSVP for each individual workshop so that you can receive a link to attend. All the links for each workshop are unique. So in our previous workshops, we reviewed credit, how much money you'll need to buy a home, and how much money it takes to qualify for a home with your income and your job and your factoring in your debts. So this workshop will be focusing more on the very first steps from getting pre-qualified with a lender, selecting your real estate agent if you're not already working with one. And we're basically in the middle of this timeline now. So in our next workshop, we're going to go more in depth on different types of mortgage products and strategies. We're also going to talk a bit about some of the different people involved in the real estate process. Some of them you may have direct contact, and some you may not. So, can you think of anybody who's missing on this page? To me it's obvious because I do this all the time, but I think it's kind of interesting that like we don't have on here the seller's agent and the seller or builder. So we of course we have the buyer, you, and then a loan officer, hopefully me. There's real estate agents for both the buying side, which should represent you, the buyer, and the listing agent or the seller's agent. There's also the seller. We have an appraiser, title officer you probably won't come into contact with, or the appraiser actually. You're going to deal more with the inspector. Other people that you may not see directly would be the underwriter and processor. They're more behind the scenes, and as well as the insurance agent, which you might meet your insurance agent or know them as well. And we're going to be going over these slides on future classes as well. But we will be discussing today the loan officer, realtor, underwriter, and processor. So I often find that sometimes people, especially first-time home buyers, if you haven't gone through the process before, might be a little confused about what is a pre-qualification and what is a pre-approval and what the differences are. So, and they are basically different stages of the mortgage process. So pre-qualification or pre-qual, as it's often referred to, basically means that you have been verbally provided your information to a lender and that they have done some calculations and they have determined what you roughly qualify for. So there's no guarantee to it. You might have a real lengthy conversation with them, but unless you've given them your supporting documentation, have had your credit ran, you're not pre-approved, you are pre-qualified. So pre-approval is the next step. And you've probably have submitted an application at that point, and the application can be done verbally or online or face to face. You have had your credit ran. The lender has run your preliminary underwriting through the automated underwriting system or computer program, and you've supported them supporting documents like your income documents and bank statements so that they can see that what you've told them matches what's on the application. The pre-qualification stage is a great time to select your lender if you haven't already done that yet. You can get a sense of how the loan officer is going to work with you, how quickly they respond to you, what their programs are, what they offer, and how their rates compare. During a pre-qualification, we discuss what your desired total monthly mortgage payment would be, and what your desired payment and what you qualify for might be two different things. I mean, you might feel like you can make more of a payment and you don't qualify for that amount, or you might just want to have a lower payment and you qualify for much more. But it's good to know like what your goals are financially, how much funds you have available for closing, information on your employment, income and debt, so that we can determine what payment you qualify for and if that works for what payment you'd like to have to make, because you're going to be making this payment for a long time. And before we move to a pre-approval, I really prefer to have a discovery call with my clients. I think it's critical for us to get to know each other a little better, so we can understand what your goals are. And it's too easy to have someone just fill out an online loan application, run the credit, do the math, and then just provide a pre-approval letter. The discovery part is important. It helps us to make sure that we are structuring your mortgage correctly and that it's a plan that works for you. I mean, ideally, when we do put a mortgage together for you, it's going to work for you for several years. If you wind up needing to refinance, unless it's for like a lower rate opportunity, there's a cost involved with that. So it's really good to structure it right for you the first time, if at all possible. And so there are different types, as I mentioned, or levels of the pre-approval. So the first stage, as we went over, was the pre-qualification stage, which is good to have because you do get to know what you basically qualify for. So that is on the phone, or in person, or via Zoom. We go over the three C's, which you might remember from the previous class, which is going over your credit, your collateral, and your capacity. Your credit report is not necessarily pulled. It could be pulled, but if we don't have everything, it still is a pre-qualification. There's no application and there's no verification of your information. So, and you can get a pre-qualification letter, and it should specifically say pre-qualified. And I will do that for a client if we're not able to issue a pre-approval letter yet. So a pre-approval is better. That is, again, it could be in person or over the phone or via Zoom. And then we are taking the next step of running your credit. And then we're using automated underwriting systems, or AUS is a lender abbreviation that you may hear, to determine which programs you qualify for and if it determines that you're pre-approved. And then we also get your supporting documents, and then we provide a pre-approval letter. And at that point in time, you can start shopping for a loan. And as you can see below that, the pre-approval process can take 1 to 2 days, just depending on how much information we've received from you and how complicated your scenario may be. The pre-qualification can be done really quickly, like in just 20 minutes. So the very best thing to do is to go all the way through underwriting. And some lenders will do this, not all will. It's something that you really want to ask them. And that is a pre-underwritten pre-approval. And that means that we've taken everything we've done with the pre-approval and we've given it to the human underwriter, and they review that, and to make sure that the loan officer has done everything correctly. And what that does is that once that underwriter approves that for you, that means that that portion of the application, all your information, is underwritten. And so the only thing that we need to underwrite at that point is going to be the home that you buy. And so it makes it so that you can really shop for a home of confidence. And your seller or the listing agent is going to feel a lot more confident accepting your offer as well over other offers if you're in a competitive situation. And it also means that you can close quicker if that's something that we need to do. And so again, it just means that a pre-underwritten pre-approval, that your underwriter, human underwriter, I like to say, which sounds funny, but so much of this is done with automation, has actually reviewed everything that we've provided and has blessed it. So I mean, it just really helps make the process better. Means that we can close quicker. And sometimes what happens too is I'll issue a pre-approval letter first, and then because the pre-underwritten pre-approval does take longer because it is another step and we're waiting for our human underwriter to review it. And once we have that approval, then I replace that with the with her approval, which is a much stronger approval letter. And so to help make sure that you do have a smooth pre-approval, I actually recommend that we jump to step number 2 on this chart first. before you go collecting all your documents, let's have a conversation to see what we're going to need. Because if you are not self-employed, we may not need your tax returns. And so we can put together a list for you that is going to be more specific to what you would qualify for and what we need. And so first, let's have a conversation. Then let's collect your documents. And then we'll have the underwriter review everything and issue the pre-approval letter from the underwriter. And so the next steps would be, in my opinion, the first step is to have a discovery call. And that is something extra that I don't think every lender, I don't know many lenders who do that, but it's something that I really like to do. I found it to be extremely beneficial of helping clients. And this really needs to happen before you start shopping for a home. After the discovery call, then we will start the pre-approval process. And once you're pre-approved, at that point, would be a good time to select a real estate agent if you haven't done so yet, and then you can start shopping for a home. And so we are still really at the early phases of this graph, and it's another chart that we'll be referring to later on in future classes. And so just to recap, the differences between pre-qualified, pre-approved, and pre-underwritten. A pre-qualification is basically just an interview between the borrower and the loan officer. There's no documentation needed. So you could call a loan officer and say, I just want to be pre-qualified, and they don't need to have your credit report, and you don't need to give them any supporting documentation. Some might balk at doing that. They may feel like it's a waste of their time. It's something I'm happy to do for clients because you might not be ready yet to provide that information. So the next step is pre-approved, and that's when you do provide your supporting documentation. You've probably done a loan application, whether it's verbally or online, and your credit's been ran, and we've gone through automated underwriting. Pre-underwritten is the next step where we have the human underwriter review everything that we've done with the approval, and then they formally approve the application. So it's hopefully I'm making this clear. It's a lot to go over with the different phases, but it's important to know and to be confident that you're actually pre-approved versus pre-qualified. I've talked to clients where they've come to me and they think they've been pre-approved by a lender, but they haven't yet. And so if you go out and make an offer and you're just pre-qualified, that can backfire on you if you're not actually approved for that sales price range. So super important. So the other thing that's really important to know before you get too far into the process is what type of lender to use. And there are different kinds of lenders that you can use to buy a home. Some of these are going to seem very obvious to you, I think, but why is this not working for me? One sec. There we go. All right. So banks are very common, and they use their own funds and programs. Processing and underwriting is typically centralized somewhere out of state, and they may be more strict with guidelines, and sometimes they have special programs too. Their loan officers are not required to be licensed; they're just required to be registered. So that's something that's different about them too. But they are limited to their rates and products. Then there are credit unions, and they are similar to banks except for they're member-owned. They're a nonprofit, and they also offer only just their own products and interest rates. And they might require to have a membership, but their loan officers are also not required to be licensed. Next, I'm going to skip correspondent and go to a mortgage broker. They are truly a middleman, so they don't use their own money to lend. They shop around and work with many different lenders for you, and they don't have a lot of control over the underwriting or processing because they are just a middle person trying to find you a rate and program to work with. They are required to be licensed, and which is a step, in my opinion, above just being registered. Correspondent lenders are they're mortgage bankers. They use their own funds for closing, and then they either can sell the loan after closing or they can retain servicing, meaning that you make your payments to them. Not a lot of correspondent lenders do that. We do that at New American Funding, which is nice. But we're kind of a hybrid combo between a bank and a broker. So in my opinion, I think it's the best of both worlds because we have control of the transaction. We do the processing and underwriting, and we are able to also shop for rates for you. And there's several of the big banks that we can shop as well as our own funds too. So, and if we don't have with New American, if we don't have a certain product with the banks or lenders that we work with, then we can act like a true broker too. So, one thing about New American is that we retain servicing of a majority of our loans, which is nice. I really do appreciate that. So that if a client does have an issue after closing, we're still able to help them. And we also have a great portfolio program. So, selecting who your loan officer is going to be is very important. They're going to be handling one of your biggest assets, financing one of your biggest assets of your lifetime, which is buying a home. And you're also going to be working with this person for, at least a month during the process, probably, if not several months while you're shopping for a home. And hopefully, if they're a good lender, there's someone that you'll keep in contact with afterwards. So it's important, and there is a lot to go into with selecting who the loan officer is going to be on the financing of your next home. And I wish it was simpler to do. I mean, you can't just like, thump them on the head like a melon or, just to tell like how, I don't want to say fresh, but, just how good they're going to be. So it is something that you need to take some time in doing. Research your lender and make sure that you're picking someone that's going to be able to perform for you. Now, before you do this and start shopping lenders or allow a lender to pull your credit, it's really important that you visit optoutprescreen.com and remove your information from call list. In March, regulations finally passed. I've been writing about this on my blog since I swear, I think 2006 about trigger list. And it's something that really does bother me because your credit's pulled by a lender. I mean, your information would typically be resold and you'd get about 80 or more calls and texts and just that are unwelcome that you didn't ask for from all these strange lenders that have to buy leads. And so if you go out to opt out pre-screen, you can remove yourself from this, and hopefully this really does go into effect in March in 2026 so that you won't have to do that. But this is something that you're going to want to do unless you want to get calls from strange lenders. So how to shop for a lender or select a loan officer. This is probably pretty obvious, but you can get referrals from your family or friends. Your buyer's agent's going to have recommendations on who they'd like to use. You can do online searches. I would Google and check out, verify whoever you get recommended to, so you can check them out as well. You can attend a class or workshop like this. And you might also want to see if they're licensed or registered. I'm going to show you a site where you can check that out and it'll give you more information about them. But do interview them because you will get an idea of their style if you can communicate with them. How available are they to you? I mean, there's a lot to consider, again, when selecting your loan officer. Uh, Please don't work with the listing agent's lender or an agent who is also working as a lender. That's just my ask of you because they will be, how do I say this? And they're probably going to show favor to the listing agent who is working for the seller. And you just want to make sure you have as many people on your side as possible when you're buying a home. And so when you do get your module from me, your online dashboard after class, I will have a special section in there on shopping for a lender and just different questions that you can ask them. So this is where you can go online and at the NMLS Consumer Access, and this will show you a history of your of a loan officer, whether they are registered or licensed. And so it'll just tell you if they are licensed or federally registered. It'll give you a work history, and all of these here are different ones for New American Funding, Broker Solutions Inc. So I've not made all these changes. I've only been a mortgage master for 22 years, and then I've moved to New American Funding in October of 2022. So, and before that, I was in title insurance. You can see all of this about me as well as my maiden name and my previous married name. So you can get a lot of information as well as if there were any formal complaints filed against me, which there is not. You could see if your previous loan officer worked at Taco Time just last month. I mean, it's important information to know, I think, when you're selecting who's going to be handling such an important transaction. So shopping by rates to pick your lender, I think, can be really challenging. And obviously, that's something that I recommend. It's definitely a consideration, but it's really a tough way to shop because it is a moving target. So mortgage rates are based off mortgage-backed securities or bonds, and they move just like stocks. I mean, they change throughout the day. So the price or what a mortgage rate might be throughout the day changes throughout the day, sometimes several times a day. And just because one lender has a better rate on one day, that same lender might not have the best rate the next day. So, and also too, just because someone's rate is better does not mean that they're going to be able to close the loan. So, I've rescued several loans from loan officers where, especially online lenders, where they offered much lower rates and then the purchase fell apart because they weren't able to do the job. So they either quoted a rate that wasn't available and were kind of gambling that it would be, or they were just inept at being a loan officer. And so, what do you understand about mortgage rates and how they fluctuate? I've kind of talked a little bit about it, but we'll go a little bit deeper on it now. So there's a lot that goes into mortgage rates. As I mentioned, they are a bond or based on mortgage-backed securities, and they change throughout the day. And so historically, bad news tends to improve mortgage rates, which sounds awful, because people will seek the safety of bonds uh, like mortgage-backed securities. And so they'll trade their stocks for bonds. And so if we get a really strong jobs report, we might see mortgage rates go up because that's good news for the economy. And it may also be inflationary if it shows strong wage gains or wage inflation. And inflation reacts negatively to bonds. And so there's just a lot that goes on it behind the scenes. And then when you hear the Fed lowering rates like they did today, as we're doing this, sometimes that makes mortgage rates go up as well. It's just going to depend on what the Fed has to say. But the one thing to know when the Fed does make rate changes like they did today, they dropped the Fed funds rate by a quarter point just about an hour ago. Um, Mortgage rates didn't drop a quarter point. So they're about the same really because the bond market was already anticipating the Fed's change and they are doing the Fed's funds rate. So and I'm going to look at my chart here, see what else I have not covered here. So we talked about the jobs report, the stock market, Federal Reserve, we just talked about global impact. Bad news will make rates better, unfortunately. And also, it's important to know too, credit scores really impact mortgage rates, and I'm going to go over that next as well. Your debt, as well as the down payment, and the if you have a jumbo loan or a different type of mortgage program too that you have. And this is, we're not going to go too deep on this, but just to illustrate this for you, and I think we've gone over this in earlier classes. If you were to do 20% down, which is this section here, and your credit score is over 700 or in the 700 bracket, there are actually 5 different price points that would impact the rate. So that same rate is going to cost 1.375%, or actually 1 point more on this bracket than if your rate was 780. And that's 1 point in fee, not in rate. And this typically gets factored into rates. So, and it's just, so the down payment amount and the credit score will impact rates. Something that I think is also you might find interesting is this is like the highest bracket is 780 or higher. If once you start to add mortgage insurance on these higher loan to values or lower down payment, the cost for that rate gets lower. So, but you're going to have mortgage insurance in your payment. So, just my only point is with this screen is that there are different factors for pricing your rate that need to be considered. And this is actually from today. And so this is a screenshot of mortgage-backed securities and how they move. And this is something that I look at throughout the day with my job. And so the Fed dropped the funds rate a quarter point. I don't know what they're doing now because I'm doing this class right now, but just before class, mortgage-backed securities had improved by 14 basis points. So not 25 basis points like the Fed movement, but 14. And so and there's a lot of other things are being released, and this chart was before the the Fed meeting or press conference following the rate cut. So this could be completely different now. But the one thing I do want to show you is this is the last Fed rate cut, this big red stick here, prior to this one, and it was a not a good day for mortgage rates. And even though it was a rate cut, so it's just going to depend on how markets react. And again, when you're interviewing lenders, ask them if they offer a discovery call or meeting, because it does truly set the stage for the rest of your process, and it's a step not to be missed. And it'll help make sure that you are on the same page and that your goals are clear. So again, anyone can process a mortgage, but the process can be better than some than others. So I highly, highly recommend this step. It's not to be missed. So we start after the discovery call with a pre-application, or and this could be before or after the discovery call. So this is what it looks like when you go to apply online, and or we can take your information over the phone. And the website will walk you through questions, and it should take you about 20 minutes to complete. And it's okay if you don't have like every single question answered. With this information, we're able to add to it afterwards if needed to, or clarify different items. And so after the application was when we do the preliminary scenarios, and it could even be before the application too. These things can kind of happen at different times. But again, this could still be the pre-qualification stage, and this is in your credit or application are not required for a scenario or quote. So this is just kind of reviewing to see what fits for you and what your goals are. And the scenarios that you receive from a lender should be clear, and they should include the total mortgage payment, including the taxes and the insurance, even though property taxes and homeowners insurance will be estimated, or it should be clear if they're not included, how much the closing costs are going to be, what type of mortgage it is, what the interest rate is, and the APR, or annual percentage rate, which is not your note rate, but it is what your payment's based on. And the APR is actually required to be disclosed whenever someone is quoting you a interest rate. So these are all things that should be on any quote or scenario that you receive. And you can, again, receive all this before you're pre-approved or even pre-qualified. You could ask for a quote before you get pre-qualified. Whoops. My mouse is being too happy here. All right, so this is an example of an overview of a scenario at the beginning of phase, and this is for a home price of 500,000. And this client has told me they have about 40,000 saved up for down payment and closing cost between their savings and a loan against the 401k, and they're trying to decide if they want to do a 3% or 5% down program. And sometimes we start with something just as basic as this and showing them like what the um, purchase price could look like, what their loan amounts would look like, interest rate, and what the payments would look like for this. Tax benefit is factoring in that's going a little deeper. I sometimes will go over that or not, but this is the benefit that they get, making several assumptions from our interview. And then this would be the cash to close and the monthly savings. So this person might want to put 10,000 down more in order to save $115 a month, or they might want to keep that 10,000 because maybe they have home improvements they need to make, and have a slightly higher payment a month. So these are just kind of an example of what it could look like for you. So after we go over scenarios and if we've run you through automated underwriting and we have the approval, you'll receive a pre-approval letter. And my pre-approval letter doesn't look like this anymore, but it gives you a good idea of the different things that need to be addressed. And so one things that you're going to look for, regardless of what lender you work with in a pre-approval letter, is it should be dated. It should have your names on it. It should include the sales price, the type of loan, the mortgage payment that you're qualified for. It should address that your credit's been ran, that your employment and income's been confirmed, and that all funds for closing have been verified. There should also be like an expiration date on it too. And the pre-approval letter should clearly state pre-approved and not pre-qualified. So the pre-approval letter on this one is subject to receiving a valid purchase and sales agreement and satisfactory title commitment and appraisal. And so it's not unusual for me to prepare also during a transaction several pre-approval letters. So we might start with this one is up to 505,000. Maybe my clients find a home for 600,000 and we're able to find them a way to help them qualify. So I would reissue a new pre-approval letter after I run those numbers for them. Or maybe they found a home for 495 and they're going to ask the seller for 10,000. Well, then we don't want to show the seller that we have, but they're actually qualified for more because they may not want to give them that 10,000. So there's a lot of strategies involved. And again, not unusual for me to issue several pre-approval letters, but we start with kind of like a base one and we'll move from there. It's really important that throughout the process that before you make an offer on a home that you do let your loan officer know so that they can give you a pre-approval letter that's going to be tailored to your offer. So I also like to kind of like kick it up a notch and provide a pre-approval letter with a digital offer to the listing agent. And this does take a little more time, so sometimes we don't always have that luxury. But if I do know about your offer and we have the time to do this, this is something that's going to help you stand out if you're in a multiple offer situation. And so what we do here is I text the listing agent your offer so that it stands above everything else that they're getting. And this is what they see on their phone basically. And then it has a video where I greet them, I review their offer, confirm to them that you are a highly qualified buyer and that you've gone through the approval process, hopefully pre-underwritten as well. But this has been a great tool to help people win their bid. And again, the pre-underwritten pre-approval makes your offer more attractive to sellers, and you can move into your home like typically within 3 weeks after mutual acceptance, and it gives you peace of mind with your pre-approval too for when you're shopping. And something that does happen, and it's no fail. Once you start shopping for a home, and you're approved for mortgage, you're going to be hypersensitive to seeing rates everywhere. So it's kind of like when you decide that you're going to buy a new car, or you do buy a new car, and then all of a sudden you see that car everywhere. So, and this is a trick that our brain does. So it's actually called the reticular activating system. So it's a sensory filtering action, and it's supposed to be helpful for you for focusing, like I'm not doing right now. Um, but it is something that you are going to notice. And so just be aware that, again, rates change constantly. And then a lot of advertised rates are a little bit of a bait and switch you may find. So it's important to see how many points or what's involved with what the rates are being offered you or quoted to you. Also, once you're pre-approved, or even if you're just considering buying home, these are important things to consider. So, don't make big purchases. Don't quit or switch your job. Even like switching your job, staying with the same employer, but making changes to your income can impact your approval. And we've gone over that in previous workshops. Don't open new credit because that'll bring down your credit score, or closing credit will as well. Closing credit accounts will hurt your score too. Um, a lot of this is pretty basic, so don't make late payments, and just don't allow your credit to be ran until you're ready to work with that lender. And large deposits into your accounts you're going to have to document or explain. And don't switch bank accounts. I mean, it doesn't ruin the transaction, that one, but it does like make for more documentation for you to have to provide. And don't co-sign for loans either because they will have to be factored in possibly into your new loan for what you're trying to qualify for. All right, before we get into this, I'm going to take a drink of water. And I hope I'm not talking too fast. So hopefully you've selected your loan officer, and of course, I hope it's me. If you haven't already, you're going to need to select a real estate agent to work with as well. And this is really important. Your real estate agent is not only going to show you homes, but they're also going to prepare your purchase and sales agreement, which is the legal contract that is going to provide instructions to everybody for your purchase. And they're also going to help negotiate for you and look out for your best interest throughout the transaction. So they do quite a bit for buyers. And yeah, so they're not just a salesperson, they are your advocate. They're going to help protect your interest and help navigate the process with you and negotiate on your behalf. And so I think, equally as important, as a loan officer is. And you want someone too that's going to work well with your loan officer too, hopefully. So, um, and it's important to note that the buyer's agents represent you and not the seller. And this is really important. There are some agents that can probably do both, but I feel so much better when my clients are working with a buyer's agent who's going to just be looking out for their interest. So, what a buyer's agent typically does is they help you define what you want versus need in a home. They're going to help research properties, provide you market insight. They're going to prepare the purchase and sales agreement, which is critical. They're going to coordinate your home inspection. They may work with the appraiser with getting them into the home. And they're going to be communicating with your loan officer and with the escrow team as well. So, they are going to be making sure that that contract is followed through and keep you informed and hopefully calm during each step. So they are really a definite key player on the home buying team. And typically, although not always, but typically their commission can be paid for by the seller, but there has been changes to that too that is important to be aware of. Listing agents traditionally represent the seller and not the buyer. So listing agent's job is to get the seller's home sold for the most money or profit for the seller possible. And sometimes a buyer may think that working directly with the listing agent is going to help them save money, but odds are I don't think that it's not a guarantee. And this is the same as working with a builder's real estate agent too. They are not there to advocate for you. They work for the seller. I just think it's so much better to have a buyer's agent and not work with the listing agent as your agent as well. It is currently legal in Washington State for a listing agent to work with both the buyer and the seller, and that's called dual agency. And you just have to basically trust that they're going to do both jobs of being a listing agent and a buyer's agent, and keeping your information separate in their head. So I'm not a fan of dual agency. I never have been. I just think it's so much better. There's so much going on, and I just think a buyer's way better off on having their own separate representation. And I hope I'm not going to make any agents angry watching this if anybody does. So, who pays for the agents? This is something that's come up lately, and there's been changes with our laws about that. And agents are paid a commission based off the sales price of the home typically. And keep in mind now, as I get into this stuff, I'm not a real estate agent, and this is a conversation that you need to have with your real estate agent. So it's just a real high overview for you. But due to recent regulations, there's a lot more transparency as far as who pays for the real estate agent. And so it is real important that you have this discussion with your agent. And it used to be more often that the seller automatically paid for the both commissions for the buyer's agent and the listings agent. And really what often happens is that the commissions get baked into the sales price of the home. So now, though, with recent regulations, the seller could say, you know what, I don't want to pay the buyer's agent. And so if that happens and you find a home like that, you can decide you don't want to buy the home, or you can decide I'll go ahead and pay my agent that cost. Or sometimes you can even add the agent's commission to the sales price, and we roll it all in. And also too, I should state that the 3% for the listing agent, 3% for buyers, that is not a set commission at all. I'm just using round numbers. So these are all things that you should discuss with your agent. So how to find an agent. So it's similar to finding a loan officer as well, but before you walk into an open house, I recommend finding an agent to work with. Because when you walk into an open house, you are walking into, the agent who's probably representing the seller or works with the agent who is representing the seller. So again, you want to have your own agency, your own representation. So you could ask your mortgage professional that you're working with to recommend an agent. They'd be happy to do that. Referrals from friends or family, your tax or financial advisor, or reviews online as well. And again, I Google them too and just get references and check them out so you can learn more about them. Um, So you're going to want to find someone who works with you the way that you like to work with. They're going to be helping you check out open houses, writing your offer, and helping you win your home. So you want to make sure it's someone who listens to you, and works with your lender. So it's important that they have local expertise, that they are a good communicator, that they're experienced with first-time home buyers, and a team player, and someone that you can trust and have rapport with. Because remember, you're going to be working with them, at least 30 days or so, or longer, depending on how long it takes for you to find a home. When you interview an agent, uh, here are some questions that you can ask them just to give you an idea of things that could help you kind of like determine who you want to work with, but do interview them. Also keep in mind too that agents will often have their own preferred lender too, and you don't have to work with that lender. You can talk to the lender and interview them as well, just to decide in the end who you want to work with. But it is your team that you're assembling to put together for you for your home purchase on people that are going to look out for you. So once you find an agent, they are probably going to ask you to sign a buyer brokerage agreement. And so I'm not an attorney, so but take your time to read the agreement, make sure they explain it to you. It does go over how the buyer's agent is going to be compensated and dual agency as well. So of course, another option to possibly consider is a for sale by owner, or people call it FSBO. And I've had some clients who are just determined to find a home that is FSBO, or for sale by owner, because they believe it's going to save them money because they're not paying that real estate commission. But buying a FSBO, it can sometimes work out. But if you do that, just know that it can be a little trickier because you don't have that real estate contract, or you need to create a contract. And so you don't have that representation to help you guide you through the process. And I do help people with FSBOs. But oftentimes, like, they should probably have an attorney work with them to help guide them through the step to make sure that everything goes well. Um, Potential pluses for doing a FSBO: you can possibly have more communication with the seller. That can be a pro or a con depending on the seller. You might get a better price. You may not have a bidding war, and it might be more flexible, but you're going to want to make sure that you have a solid contract just to prevent anything from going wrong. The risk with a FSBO is, again, you have no real professional guidance or representation. A mortgage professional cannot give you legal advice. We're not allowed to. So that's where I might state that you probably really want an attorney if you decide to buy a FSBO. There can be higher risk of legal or contract mistakes. Sometimes it can be difficult working directly with the seller. You might be overpaying, you don't know, unless you have a real estate agent helping giving you comps for that. And if something does go wrong, I mean, you could be on your own. You could potentially risk losing your earnest money deposit. So again, if you do recommend seeing a FSBO, like if it's that home you really want, it just happens to be for sale by owner, you could see if the seller would accept working with your agent. And that way they're just maybe paying for one commission, or we're doing, as I discussed earlier, maybe we're working in your agent's commission into the sales price and you're financing it. Otherwise, I'd suggest getting a real estate attorney to help you with the FSBO, and they can possibly also act as the escrow company to the closing as well, just to make sure that you're protected. So now that you've selected your lender, you're pre-approved, you know how much home you can afford, and you found your real estate agent, you are actually ready to go shopping for a home. So, but as I've mentioned, please, make sure that you are pre-approved, not pre-qualified, before you start shopping for a home. If you start going to an open house and visiting before you're pre-approved and you know how much you can actually qualify for, or what the payment looks like, you might, feel disappointed. And then that makes it kind of tough when, when you're in that first time home buying price range and stuff. So it's way better to know what you can qualify for in advance. And again, contact your mortgage professional before making an offer on a home and get updated scenarios because it could be too. Each home has its own property taxes that are unique, and it's not a set amount for every home or a set percentage. And also, interest rates change, and so you might have a different strategy with a different home too. So you're going to want to actually contact your loan officer, let them know what home you're planning on making an offer on, and you can on strategies together and they can provide a updated pre-approval letter that's tailored to your offer. And I also like to, again, reach out directly to the listing agent when you're getting ready to make an offer, so that helps improve your odds of getting an offer too. So it's just important to keep in contact. So now that you're pre-qualified and preparing to make offers, I want to introduce one more important document in the entire home buying process, and that's the Washington State Purchase and Sales Agreement. And so this is a legally binding contract between you and the seller, and it spells out everything about the purchase. I mean, the purchase price, your contingencies, what stays with the home, and the steps that are leading to closing. And once both parties sign it, it becomes the roadmap to the whole transaction that follows. And this is an example of what one can look like, and it's many pages. This is just the first page. And it's going to include, I mean, you can see the price, set dates and deadlines, contingencies, like inspections, financing, and appraisal, what stays, what goes, who pays for what. It outlines your financing and your loan approval, the responsibilities for the buyer and seller, and what happens if things don't go as planned. So you're not expected to understand every clause. Your real estate agent will talk you through these documents in detail when it's time to write an offer, and I'll be coordinating with your agent to make sure all financing related details are met. So you can see your buyer's agent is very important, and they're going to prepare the purchase and sales agreement with you. They will review the documents in more detail than what I'm going to go over here. And because I'm not a real estate agent and I'm not an attorney, so I just want to give you a basic idea of what you can expect once you get to this stage in the process. So here's some key sections that you should know about. So the purchase and sales agreement is going to hopefully protect you if something goes wrong. So it ensures the seller can't change the terms later. And this is how come one reason too, how come you want this agreement or something like this if you're looking at a FSBO or something. You really are. It's really important to have this protection. It also outlines escape hatches, basically, or contingencies in case a major issue arises. So it gives you time to do the inspections, or it sets the time. Sometimes you don't have a lot of time to do them, appraisal and the financing. And when you sign the purchase and sales agreement, you're officially under contract, and this document controls what happens next. And so think of the purchase and sales agreement as your safety net to protect you and ensures the entire process moves smoothly from offer to closing. And it is very, very important to make sure that your agreement is filled out correctly and that your agent helps you fill out this agreement. Well, they're not going to have you fill it out, but that they fill it out completely for you on your behalf. So the purchase and sales agreement is what all parties follow for your transaction, and it is giving us instructions on what's intended for the buyer and seller as to what you've agreed to mutually. It's also referred to as mutual acceptance, which you've all both signed the parties. The purchase price is the agreed to price to buy a home when you want to make an offer at that price, and the seller accepts it. And so sometimes it might counter back and forth until you guys agreed on a set price. So depending on the market, it might be at the listed price or under the list price or even above the list price in a hot market. So this is something that your agent is going to help advise you on. So the earnest money is your deposit that you're going to put on the purchase. And it's possible that should you not perform in accordance to the contract, that you could lose your earnest money. So I rarely see this happen. So most times the earnest money can be refunded if something goes wrong. These are, again, terms that the agent will help review with you. And the amount of earnest money that is deposited is credited towards your funds at closing. And the amount that the earnest money is something that you're going to need to talk to your agent with as well. The more expensive the home, typically the larger the earnest money that needs to be put down. So the closing date is the date that we're all aiming for to have your purchase all wrapped up and closed. And everything from processing, appraisal, title, and escrow need to be done so that we're ready to record your transaction and close and you get the keys. So the financing contingency protects you if something changes in your mortgage approval. So we have a set amount of dates again in order to have your loan approved. And this is another reason why it's great to get the pre-underwritten pre-approval done. And it does require staying in communication with your lender, and it also explains the deadline for the appraisal and the loan approval. With the appraisal contingency, it protects you if the home doesn't appraise high enough, and it outlines options available for you, such as renegotiate the sales price, walk away, or pay the difference. And so lenders will use the lower of the sales price or appraised value when it comes to your loan. And so if an appraisal does come in low, unless you and your agent have waived this contingency, this is a potential point for renegotiating your contract. And or depending on how much funds you're using for down payment, the lender may be able to restructure the loan if the seller won't budge on a lower price. If your earnest money is not waived, you may be able to walk away from the earnest money deposit if you have a low appraisal. The inspection contingency gives you time to hire a professional inspector and negotiate repairs or walk away from the contract if needed. Sometimes sellers may have already had a home inspection done in advance and you can still have one on your own, or sometimes the seller may refuse to accept an offer with an inspection contingency. It's all going to depend on the home and the market, and this is something, again, that your real estate agent will help you with. The home inspection is typically not required by a lender, but it is for your protection, and I highly recommend that you get one, even on new construction. The inspection is not something that it's not the same as your appraisal. So the appraisal is done for the lender to show value. The inspection is done for you, and the inspector is trying to find if there's any defects to the home. So the closing date and possession, this is when the home becomes yours. It discusses when you get keys and when you get to occupy or move in. So sometimes the seller might say, hey, I need a week or two to move out. And so all these things are negotiated in the contract. And as I mentioned earlier, the purchase and sales agreement may go back and forth between the agents, you and the buyer and the seller, countering all different aspects, from the purchase price, the closing date, or even, who the title or escrow company may be. And so once we get the purchase and sales agreement, it can be pretty marked up. And again, once everything becomes agreed to, that's what we call mutual acceptance, and that's when we move forward with your purchase. And so for time frames, for closings, 30-day closing is pretty typical. I mean, if you have holidays and there's sometimes we'd like to be a little bit longer. But if you are pre-underwritten, we can close quicker than that. And sometimes, in 2 to 3 weeks. The earnest money is due quickly, like often in just a few days. And typically that's delivered to the escrow company, and they will hold those funds. They're a neutral third party. Some real estate brokerages will hold them too. So it's something, again, to talk with your real estate agent. Inspection period, it might be 5 to 7 days. If the seller's allowing one, you can always ask. It's going to depend on the home. The appraisal typically takes 1 to 2 weeks, and final loan approval is due before closing, but typically the purchase and sales agreement will state how much time we have to give loan approval to the seller. And again, your real estate agent will walk you through every part of the purchase and sales agreement. They will write the offer, explain each clause, and negotiate on your behalf and ensure you're protected. So your lender and your agent are a team, and your agent's going to negotiate your contract, and the lender's going to follow it to make sure that everything goes forward as far as the lending portions of that are concerned. So big congrats to you. You're taking another big step towards home ownership. And by now you should understand kind of what the process looks like of going from pre-qualified all the way to getting ready to make an offer. So In our next class, we're going to go over what are we going to go over? We're going to go over different mortgage programs and strategies to come up with. So we're going to go a little bit deeper into that. And I'm not seeing any questions. If you do come up with any, you can email me after the class. And I have my contact information on a slide here. And I'm always happy to answer any questions that you may have. For homework for this class, I really want you to opt out of unwanted calls before you contact a lender. Optoutprescreen.com and also donotcall.gov. And a little bonus homework. You may want to create a vision board for your first home. I think it just sounds kind of fun. And you can kind of identify things that are important to you for your first home. And it can even include things such as part of your financial goals. Maybe it's an award that you can have for saving up a certain amount of money or whatever. But I'll have information for you in the dashboard that you'll be getting after class. In our next workshop, as I mentioned, we are going to go over the different types of mortgage programs in depth and different strategies for buying a home, including tips on how to make it more affordable. But do make sure that you register at mortgageporter.com/education. And then this is a little screenshot of the dashboard that you will be getting after class. And again, you don't have to wait for our next workshop, which is going to be in January. We're going to skip the holidays here if you want to talk. So please reach out to me anytime. Scan the QR code for my information, or of course, you've got my phone number and my email there. So I hope you have a great week, and I hope to talk to you soon. Take care.